Hello everyone, this is your host Vaibhav. Very good morning and welcome to the all of the viewers to my stream. In today's session of Daily Stock, we are going to consider the financial earnings of the Intuit Inc., which is a service and product providers to many of the small businesses and self-employed people with its products like TurboTax, Credit Karma, QuickBooks, and MailChimp, making it easier for the small businesses to operate. And this company also offers services to help the tax professional in their compliance. So we are going to look at its quarterly earnings for the first quarter of fiscal year 2024, and along with that we will also be looking at its trajectory in the recent past of how its share price has worked and what is the likely to be trajectory of it in coming quarters. First, we are going to look at its financial statements. If any of you have any query regarding this, you can always write to me while this session is live as well as after the session, as and when you feel like, and I would be there for you, and we will have a discussion on any of the topic you would like regarding the Intuit's earnings. If we look at the key highlights of the financial earnings of the Intuit, its revenues grew to $3 billion in the first quarter, which is up 15% in annual terms. But if you look at its quarterly earnings over last couple of years, particularly over last 2 3 years, you will see that the earnings have been in ballpark of $2.5 to $3 billion, and there has been some fluctuations depending on the quarter, depending on the tax season, but that is the broad region in which the revenues have kept fluctuating, and I'm not really expecting any significant jump in its quarterly earnings even in the ongoing quarter. It is likely to be making somewhat close to $3 billion, might be some percentage here and there, but it is likely to be in the ballpark of $3 billion. Its whole year guidance stands at 15 billion or thereabout. So we are looking at these numbers of close to $16 billion this time around, and with this it is expecting the annual growth in the revenues at around 11 to 12%. So for this year it is expecting the growth, and it is on back of strong rebound in the business sentiment. And if we look at the quarterly earnings of other major companies, we have seen recovery in the revenues and also the betterment in the margins, operating margins, as well as in the net profit. So all these factors are kind of signifying the healthy economy, and if the economy is doing well, of course the small businesses, self-employed people, and similar clients of the company are going to be doing well. So that is likely to reflect on the earnings of the Intuit Inc. as well. So for this quarter, the revenues are likely to exceed $3 billion, but the growth is not something to talk about much because the revenues have been stagnating for a while now, and unless the company releases some breakthrough products, some product which catches the fancy of the consumers, of the clients. Till then, I think we are likely to see it earning in its current way, and not much is likely to change for the company. And that is also one of the reason why, for last couple of years, 2 3 years in particular, the share price has fluctuated, but it hasn't really been able to climb past prior peak established in 2021. Even in this year, the rally has been quite good from the lower levels, but it is still trading below its prior peak, and I'm not really expecting it to climb fast to its prior peak. Rather than that, it is likely to take time. It might keep consolidating, and the near term bias is likely to be bullish, but I'm not really expecting any major upward thrust from the current levels. First, we go into the details of its earnings statement. This is the report it filed with the SEC, Securities Exchange of the United States. We are looking at its condensed consolidated income statement to see what are the key takeaways. All right, here we have this condensed consolidated statement of operations for the 3 months ending October 31st. In it, you can see that the services are the major revenue source for the company, whereas products and other sources just are one fifth of the services. So in total, we have the net revenues just little shy of US dollar 3 billion, which is quite a good number if we look at the earnings of the October 31st 2022 quarter ending, because then many of the tech segment companies were also struggling. Many of the other businesses were also looking at slowdown. The inflation was running high, and all these factors had affected the business sentiment negatively. But in recent quarters, there has been recovery, and we have seen this also helping the Intuit Inc. raise its revenues, and I'm expecting it to continue like this for a while unless there is major change in the economic scenario. The macroeconomic factors have been quite helpful, and more than the company's innovation or new product offering improving its revenues. This is a general improvement in the business environment, which has contributed to the better numbers for the Intuit, and that is one thing to keep in mind as and when we have to decide whether to invest or whether to sit on the sidelines. For the Intuit, the four segments are there which contribute to the revenue generation, but for last couple of quarters, one source is bringing in the revenue with growth in double digits, but other revenue sources have been lagging. So that is also one thing which we will have to look at it later on. Now, if we consider the cost of revenues, the total cost and revenues were not very much different from what it was a year back, and with this, the net income is at US dollar 241 million. All right. Now we also have to look at the cash flow statement to look at its cash position, whether it is having enough cash at hand or not. The balance sheet is looking quite good. If we consider the cash flow statement, the cash position of the company has improved, even though its net profit is just over $200 million. But if we look at its change in the cash and cash equivalent, it has improved. The cash had by almost $1 billion. Now it is sitting at US dollar 3.8 billion. That's quite a good number for the company of this size. Now its valuations have also soared. It has gained more than 50 percentage point, and that is also, I think, because it has quite good amount of cash at its book, and it can utilize that for innovative research and development projects. And if it is able to crack the product with these disposals, with these resources at its disposal, and build something to work with the AI wave, it is going to be major beneficiary. But that is something for the future, that is for another day. Now we are going to restrict ourselves for the financial statements in this earnings session. Now we look to its technical outlook, and for that we are going to consider the charting over different time horizons. This for the shorter term, and in the short term, after this steep decline from 631 to below 600, it is trying to regain, and in today's session it is holding close to US dollar 600, but I don't really think it changes much. It is had it had seen rally, quite good rally, almost gaining 10 percentage point in the month of December. From there on, it nosedived, but it is still trading on the higher side. And if we look at the overall formation from the medium term to longer term formation, it is still of higher highs. But in the short run, as it has declined below these prior consolidation swing low, I think we will have to watch out for how things shape up for the Intuit Inc. Over the next couple of sessions, and if it doesn't really climb much and continues to consolidate close to 600, then I think it is likely to decline below these prior swing low of around 585, and we can expect it to decline further towards 570 or even below that. But for that, we need additional confirmations to be in place. Right now, we will have to sit on the sidelines and see if it recovers from the current levels or if it goes sideways. And if it does goes sideways over next couple of sessions, then we will have better opportunity coming our way with quite a good risk reward ratio as well. Now, if we change the time horizon to medium term, and in it, if we consider the formation, it is also of higher highs and higher lows, but then we have to consider that it is sitting on these higher levels after having rallied for most part of last financial year, and given its recent decline, it might be even a start of a fresh consolidation phase. So we'll have to be careful on these elevated level, as it seems to be losing momentum, but it is too early to say whether it is likely to change course. So we need to allow more time for it to consolidate and provide us with more clarity. Now, if we have to consider the longer term time horizon, the price fluctuation has been quite steep for the Intuit Inc. for last couple of years. It had declined from 715 to below 350. That is, it had lost almost 50% of its value within a year. But after prolonged consolidation closer to the 400 level, it has now again started to climb, and it has been able to make this upward trajectory sustainable. And in this environment, we can expect it to climb, continue to climb, but if this is the time to get involved and trade or invest for the longer term, then I don't really feel that is the right way to look at it. Even though the formation still looks good, but it is not having that strong momentum. Neither is the current risk reward ratio that favorable. So that makes us a bit cautious, and I would advise for you to be vigilant, keep an eye on the stock price over next couple of weeks, and if it continues to give you these positive vibes, and if it continues to consolidate with bullish bias, maybe if and when we have the opportunity to buy it close to 500 or close to prior swing low, we can indeed take a chance. But right now, we will have to be cautious and allow it to consolidate for more time, even if you are looking for the investment opportunity from the longer term. So that's my assessment looking at the current price formation of the Intuit Inc., where we considered its quarterly earnings along with its trajectory of the share price. In both these parameters, the growth is there, but the only concern is that the growth is not really strong enough. The revenues are growing, but not at a pace we would like or we would be comfortable with. Or even if we look at the growth in the share price, it is there. We have seen these rally, but right now might not really be the time to get involved. Rather than that, we will do well to wait for the better risk reward ratios to invest and trade. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback and I'll be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous day ahead. See you next time around. Till then, goodbye.